Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Actually, I have no idea even if we're recording here or not. I just assumed that Mr. Kvarkinator did the job, and usually he's pretty good at this stuff. So just give me a second here to make sure the YouTube page is up and running. It's weird how I go like, oh, no, that's not it. Ooh, did I screw this up? I might have. Better refresh that. Let's see if I kind of a weird
No,
start.
we're streaming.
Is it? Okay, cool.
Yeah.
Thanks, dude.
Hmm?
Anyway, welcome back to the Daily Brief Recap. There's kind of a weird start for your video, eh? How can you tell we're not paid to do this? Anyway, good morning, all. And welcome back to the Frivolity. Week Monday to Friday Frivolity. Of course, on the weekends, it's crypto. Interesting how we kind of think, I watched that Broiler Chicken show yesterday. I was kind of sort of like, oh, geez, are we going to break to the upside? Are we going to break to the downside? I still don't think we've gotten a clear resolution. We started to flash short-term momentum signals. I was posting out tweets about Davos and stuff last night. And, gold and silver were rocking out of the gate overnight. And then all of a sudden, everything sort of shifted. Overnight, maybe it was through the European session. Lots of optimism about COVID vaccines. Further bidding up of crude oil prices. The Fed's Powell came out on 60 Minutes last night and said we jokingly now are calling Jerome Powell lock limit Powell. In essence, he's guaranteeing the equity markets. As long as he's talking friendly, I can't see the equity markets falling here in the short term. But at the same time, too, we had a fascinating report from one of our TRI OGs on Monday. Jamie out of the UK comes in and does a nice little top-down fundamental analysis. And my hunch is this isn't really a case or a question about money right now. It's a question of these economies are opening back up. Social distancing rules are being relaxed, and so now do we see another wave of these sicknesses hit? And as I said, Jamie did a really cool analysis of Texas, because Texas sort of opened up a week or so ahead of everybody else in the United States, and of course they're starting to see their cases start to rise again. So if we go through one of these this opening up event, and all of a sudden the cases over the next, and this is probably going to take a week or two to play out. If we start seeing those cases start to rise, and we'll be watching the data coming out of Texas as a bit of a leading indicator, I think the whole equity market could roll over and we start going back into lockdown kind of talk. But for the time being, you've got the Fed basically guaranteeing the U.S. equity and derivatives and fixed income markets. As well, too, I think we could have a bit of a curveball coming up here, in that the U.S. House passed more further stimulus packages to the tune of something like $3 trillion. I think that's one of the reasons why the stock market gapped higher on the open this morning. But the problem there is I was watching the debate on Friday as the legislation was being pushed through the House. Many senators and Republican House of Representatives people even said there's no way this bill is going to pass the Senate, and it will be vetoed by you-know-who. So my hunch is that we've got a bit of hopium being built into price here. Of course, we're nowhere near the bottom anymore, so just like my analysis with Bitcoin sort of sitting in no man's land yesterday, I kind of think the same thing for stock markets as well. So, use this information as you can. 2020, no doubt about it, this is one screwy ass year. For those people, and my general message for those people that do not have working trading plans and trading setups and really know what the hell you're doing as a trader, my advice to you is probably just leave 2020 alone, because this is going to be a mess, and we still have 2 more pivots to go. Um, for those people that can trade and work with trading plans and work with setups, holy moly, volatility is your best friend. These markets are zipping all over the place, and guys like Julian, wow, watching their trading is it's mind numbing sometimes. I mean, the guy was up like 8 G's overnight just out of the get go on some gold that he bought, and I don't know if he's still up. I got the impression he hopped off when things started to back off there a bit, but wow, what a volatile market state we're in right now. For the purposes of your conversation, I'll just simply say, for the level oneers, their first official introductory class was this Sunday. So all those people that were able to take advantage of our discount offer, congratulations. And the school is very full, and I think we're going to be educating a lot of people really well here over the coming 3 months, get you going. But I thought it was fascinating. We have one main instructor, 2 TAs, and I sort of float around just throwing my 2 cents in every now and then, just so these students feel like they're just being absolutely overwhelmed with support. And some people were like, should we be trading and stuff while we're at it? And all of us in unison were like, just put your money away. Learn the process, get good at the process, and then you can start going and playing, because this is a dangerous market right now, folks. Okay, so like I usually say, our quick sort of market summary, what we're seeing here today. Interesting. Now, keep in mind, today is a banking holiday. Well, it's actually a holiday here in Canada outright. It is a banking holiday here in Canada, so Canadian markets are closed. So when we have these holiday events, you sometimes get this really screwy price action, like the gold overnight. That was quite startling. So I am looking at today with a little bit of a grain of salt. But nonetheless, you can see U.S. dollar index itself coming off a chunk. Looks like euro is firming up here a bit. Been talking recently about how worried I am for the euro. So as long as it doesn't shit the bed here, I think Europeans are okay. But it's flirting with some dangerous levels here. There's no doubt about that. Where the hell was it? If anything, I can't remember what I've done with the chart here. Well, there's this chart. So we kind of talked about this recently, flirting with disaster. And I even remember last week's conversation with you guys. I was even like, well, can this thing hold these lows? Can it W? Well, you can see we just made a new closing low on the euro there. So we have the dead cat bounce following that. Now we'd like to see a test of the lows and then turn back up. Because keep in mind, if we change this back to a line chart, there is no W there yet. We got a lot of sloppy, boom, and then counter trend rally. And remember, this is a holiday too. Looking at the profile here, it just looks to me like they still got a little bit more business to do up in here first. So I don't think Euro's about ready to crap out just yet. So, all that sort of worry there, dodged a bullet. Let's see what happens when we're out of this funny holiday environment here. So back to our regular chart deck. Looks to me like U.S. dollar index taking a bit of a pause. We had that double bottom that came in here recently. So let's see how she acts against these lows. We sort of talked about, 1 low, 2 low, 3 low, 4 lows. Geez, again, lots of support coming in here. And if this thing does really get going, oh boy, and I'm kind of thinking that that's the event that happens maybe in like November, December, January kind of thing. But we'll see. Only time will tell. If we start seeing a whole bunch of new cases start to flare up on this, open up, my hunch is this thing's going to start rocking and rolling. With all the bullish talk out of Mr. Powell on his 60 Minutes interview last night, stocks really felt a sense of relief. Then we had sort of inertia of a company, I think it's European, I'm not totally positive, came out and said that they're in initial clinical trials of COVID vaccines. They have a vaccine that kills another virus that it turns out that it can sort of build the body's immune to this COVID because the viruses are very similar. So we'll see how that develops. If anything, it's encouraging, and that's probably the final sign that all this stuff is behind us, is when the official vaccines are out and people are queuing up to get their microchips implanted in their arms. That's tinfoil hat conversation. But anyway, point of the matter here is stocks are feeling very uppy. Is interesting how we were talking last week, and I noticed that the junior market is kind of like, I don't know. Like, I haven't really had any huge poppers here out of the junior market. But stocks on general and balance, they're pressing their most recent highs. And, I hate to say it, I know it's going to sound terrible, but I did point out to the community earlier today, just because when I saw it on the chart, and like I said, we had Jamie on the call, try and remember this. As an exercise, kind of fun. Go back on a weekly price chart of the S&P 500 and just see if you can actually find price gaps. And how often do those price gaps get filled in? Usually pretty often. And usually you do not see gaps on the weekly price chart. So with that said, we should all be cognizant of the fact that there is this price gap on the weekly S&P 500 futures chart way up top here. And, the interesting thing about this in Powell's testimony yesterday, or interview, whatever, is he said, I don't think there's going to be a Great Depression. Well, of course. Why did the Great Depression happen? Go watch that Money Masters video I suggested all of you watch. Well, the reason why the Great Depression happened was because the banks literally cranked interest rates up through that entire correction in the 1930s. They kept taking interest rates higher, i.e. kept squeezing the system, draining liquidity out of the system. Clearly, you see the press. I mean, the Fed's taking interest rates to zero. And we noticed last night in his speech, his interview, him saying, we have unlimited lending facilities. Come and borrow all the money you want. He didn't say we were going to give you money for free. But if you want to go into debt, hey, he's all arms. Hey, come on in. Borrow as much money as you want. So, the long and short of it here is when the stock market kind of sees that, it goes, okay, phew. They're not raising interest rates. So they're not increasing the cost of doing business, blah, blah, blah. So don't be shocked. I'm not calling for it. I remember I got into this trouble calling for 11,000 on Bitcoin months ago and sort of suggesting chaos levels were suggesting up top. I'm not calling for this gap to be filled in, but please understand, weekly price gaps do not like to be left open on the S&P 500 stock index. It doesn't normally happen. So don't be shocked if at some point stock market's right back up top. Wouldn't surprise me at all. And like I said, lock limit Powell, he's basically guaranteed this market. So with that said, risk on. Terrible trade location for new trades. You might want to think about maybe hunting bot setups or something along those lines on the ES if you're thinking about trading this. But really, certainly no value. V bottom. At some point, this rally will exhaust itself and we're going to head right back down into the soup. But I don't think it's today. In fact, for the short-term traders, we had illustrated that this is actually a 2-bar setup that we teach in our education program called a Doji Gap. And actually on the site, we affectionately called Joby Gap. And ironically enough, a trade through that high tomorrow, this 2-bar setup, that's actually a buy signal. And the guy who actually I learned this setup from years and years and years ago, he went into like the World Series of Trading Championships and won literally 2 or 3 years in a row. Just come back. Hey, bitch, I own all you. Wins the contest. Hey, bitch, I own all you. Wins the contest. And all he did was he just traded Joby Gaps. So I won't get into the specifics of how the setup works, but I just found it fascinating that actually was coming in here today. And, if the Fed's guaranteeing the market, you see, we talked at lots about this crude oil bot setup that's come in. You can see, gee whiz, it almost hit its price objective here today. So, also, too, what's dragging the market higher? Remember, we talked about risk on, risk off recently. Oil, I think, actually turned the stock market around here with its sizable rally. But then the ultimate question is what happens when this hits this objective and fills in its gaps from over here, right? And all that kind of talk. If there was a trade, the trade is pretty much about what I guess about 3/4 through. Certainly couldn't go and join the party there. But really interesting to see that risk on is still catching a bit of a bid here. Fascinating, actually. We're coming up to this gap level here, and notice the market stopped here. I mean, this is a pretty important level, and so like I said, it wouldn't surprise me if that Joby gap signal does fire tomorrow. This market's probably heading higher. So, yeah, it is what it is. Risk off. Fascinating, U.S. dollar index itself coming off here a bit. So, like, people around the world are like, okay, well, we can put some more money to work in places. So, we do see money coming out of the bond market. Here we go again with our narrow sideways channel. Nothing has really changed here. Now we're back pressing the lows. And we talked about a strangle trade that actually probably is the best way to go, because I don't know which way this damn thing's going to break, but when it breaks, we're going to either jump right up top here or we're going to just shit the bed down below. And really, I mean, you could have been long bots. We talked about W's and stuff. You could be short M's off of here. That's still working. So ironically enough, narrow sideways channel, this is what often happens in narrow sideways channels, is people just get bored to death as the thing just sort of bangs away through the channel. I was a little bit surprised, to be honest with you, that the gold kind of fell apart here. Maybe it's, I've often talked to you about how gold and oil cannot move in the same direction consistently. So maybe this is sort of like, holy shit, this oil is really a bull, and the gold bugs just went, okay, this is not our day to shine. The money coming into the commodity sector is going into oil, so we got to cool our jets. On balance, it still looks like it's pointing up, not down. So I don't know whether I'd be really, rah bear. It is interesting how we came up into this gapping level here, and that basically stopped the bull in its tracks. Got some juicy gaps down. Well, I guess this gap right here at about 17.15. You can see the double bottom, and actually a double bottom within a double bottom within a double bottom. You can see how they all fired. So I wouldn't have a problem if somebody said, look, I'm long gold from 1750, stop 1666. We'll live with the results. And my target is up top here. But it's not today. And like I said, kind of surprising. They opened it up Sunday night, right? Asians trading, European trading, and she just crapped right out through the day here. So we're getting some serious rejection from the North Americans of this breakout here. Fascinating how gold's actually down on the day now. And we've got our silver comparison. Silver just keeps working its way higher here. So I was interested to see that silver actually had its move stopped to trailing level on its setup. So ironically enough, any kind of M or moving average failure or something like that, and probably that silver trade you should hop off. And then, I took a look at this gold-silver ratio over a very, very long time. And I wouldn't be surprised if actually we have to come back to the midpoint. So notice the midpoint works as a really great sort of oscillation level. So that's sort of in this area. If we get up near the top end or lower end of the bands, you probably should be thinking about silver actually outperforming. I don't know whether that's really useful information for you, but I did find it fascinating that just over the short term, silver is finally starting to play catch up with the gold a little bit here. My hunch is this ratio is probably going to come back down to this key support at some point. So, it'd be interesting just to do the math. What would gold price have to be at silver 1922 to bring it down to, like, say, 80 to 1 or something like that? Something along those lines. And it's probably getting close, Anyway. All right, so point that I just wanted to make was a little bit surprised to see the gold market crap out here a little bit. But like I said, given this overt strength in the oil market today, maybe that really shouldn't surprise us. As I had sort of alluded to here recently, I really like to follow the relationship of the Russell 2000 versus the Dow. just sort of give me an idea of what this sort of temperament, what the appetite in the market is for risk versus conservative investing. Interesting how we did M out here, suggesting the blue chips were catching a bid and drawing a trend line off of these peaks. Fascinating how all we did was gap higher right into trend line resistance. So it looks to be like we're probably range bound between these two trend lines for the time being, banging away here with the top in place. So I don't know whether I can really believe this breakout on things like the Dow and the S&P and the NASDAQ and stuff is really too for real if the junior market isn't really participating. That's kind of like conversations about breadth. On the dashboard, it's interesting to see. I'd loaded this up just before we got going here. You can see breadth, from our perspective, it is trying to turn here. What we really want to see is a nice little W in our red. You notice once it starts Wing, then, hey, maybe we're turning back up. And you can see the medium term. There's no signs of bottom here yet. So kind of like this image, I'm sort of leaning towards the idea that the junior market still needs to clean up a bit more. If you look at things like advanced decline line on the stock market, you can actually see that the number of stocks advancing versus declining is actually falling off. And ironically enough, this is actually a very typical sign of the end of a bull market, is that the junior stocks, the breadth, the broader market is kind of, the indexes are all ratcheting higher. But in reality, it's just being led by a very few, the Amazons, the Microsofts, that kind of thing of the world. And everybody else really isn't that happy. So, if we look at the stock market itself, I think I said to you before, trade your setups. You want to trade this Joby gap, you want to hunt bots to take us up to fill in gaps, great, fine. But understand, this is Mountain Man, right? This is our line in the sand coming up here. This should be sort of saying, if anything, what kind of setup should we be thinking about here? I want to be thinking about shorting setups, not buying setups. So as a result, I'll let stock go if it's rallying up into here, stock that I bought off the bottom end of its range. But I have a very, very difficult time thinking about coming in on the long side here. Setups, okay, fine, right? Trade Joby gap setup, trade the double bottom, the bots, whatever. But if setups, if they start to fail, get the hell out of there. But on balance, to me, this is a terrible place to think about buying. And the sad part about it is kind of like Bitcoin. I think the whole market is in a terrible place to buy. And how ironic, we'll probably start hearing the talking heads come out and saying, okay, public, it's time to buy now. Uh-oh. We haven't quite heard that yet. So because we haven't quite heard that yet, I actually think the stock market could work a bit higher. But that doesn't necessarily mean that I'm going to be buying this just because the market can work higher in praise. All right, kind of rambly presentation here today for you all. Hope you're getting some value out of this. Let's pop back on over to our screen. So we talked a little bit about risk on, risk off. Hopefully give you something to think about. Talked a little bit about the junior market relative to the higher market. Kind of fun conversation here today. A couple flyers. First off, I told you guys I went in on the buy side on that Funco. And it looks like I'm doing okay. So there's a really good example of how you work stink bids. And, if this thing does start to ratchet up into this area, I'll just sell half on a double, blah, blah, blah. So a really good example of a recent trade that's in progress. Wish me luck. Thank you very much in advance. And here's a fun one that is such a great analogy that has crypto made it to the stock market in the form of shitcoins. And, the irony of it all is that the shitcoin whole crazy nutso altcoin bull market there, I now actually see that it's transitioning into the stock market. So very typical. I couldn't touch this thing with a 10-foot pole in stock market land. Trades over the counter. It's got like 300 million shares outstanding. Classic pump and dump. But you all should see the W's. You should see the face rips. Bang half out on a double. Sell it all at a double. I don't really care. But I just thought this was a fascinating analogy that, in this seasonally appropriate time of year, sell in May and walk away. When does the public most enthusiastic? When are they most liquid? When are they most, participatory in the market into the spring and early summer? And here we go. The piece of shit stocks are actually rallying. And this is in the crypto space. Is this investment grade? Absolutely not. It's over the counter. They don't even have any legal right or legal obligation to tell you the truth. It's got 300 million shares out. Can you have fun and trade this crap and bang out W's or doubles? Yeah, you can. And I thought it was just such a cool analogy. Kevin was telling me here before we got going, hey, you want to look at this one? 800% move on the day. Woo! Anyway, caveat emptor, do your own due diligence. You, of course, know I'm never going to tell you what to buy here. I'm just going to tell you what I'm doing with my money. And it's just a fun anecdote. Heading on over to the corn. In particular, we're actually putting out, this is such an interesting battle level here. Whether you look at it from the bullish case or the bearish case, why don't we look at it first from the bullish case? Did see a lot of sort of internal anecdotes that sentiment within the space is starting to improve. I put out sort of messages recently saying, hey, we got to clean up all these M's, before we can start thinking bullishly. And you can see this is the process of them cleaning up those M's. And you can see things like ETH and Litecoin, they're actually, well, not Litecoin yet, but ETH is actually trying to go and break those M's. And same thing with Bitcoin. So that's a good sign. Here I sort of posed the question to the public. Did Tether go and print a whole bunch of new tethers? I heard they print like $3 billion worth or something like that. Does that have to be allocated? How does that process work? Blah, blah, blah. Is that bullish? It should be, but the problem here is I want to see M's in this Tether price relative to Bitcoin to actually show me that people are selling their tethers and buying Bitcoins with those tethers. So I don't see any M's on this picture, so I was missing that piece, but I really did like what I was seeing out of here. And so what that kind of told me was, okay, it looks like we've got some sort of momentum push going on. So, I noticed, and it's kind of a funny shout out to an old site veteran, OG at TRI, a guy named Da Vinci. If you don't know him, Google him. He's kind of a fun character. As he was going through the education program, I encourage students to take ownership of these tools that I teach you how, my job is to set the table. Your job is to try and figure out what tools speak to you and then just start building your plan, trading off the tools that I've taught you how to use appropriately. So Dav here really liked W's in OBV and price oscillators, things like RSI and Williams percentage R, or bastardized Williams percentage R's, my Willie indicator. And we started seeing that last night, right? You can see the W trying to come in on OBV. You can see the W trying to come in on RSI. You can see the W trying to come in on this modified Williams percentage R. So if we get all these W's to come in and you get a W in price, the DAVO says you just hunt a 2-to-1 and just take whatever structure that is, which is awesome setup. It's fairly simple. It's clean. Not a lot of moving parts, and easily better than a 60% win rate. And at a 2-to-1 risk reward, that's not bad living. Interesting too, if we did rally up there, that would be a third touch of this megaphone pattern. It would also be sort of an underside brush of this existing trend line. It would be, my hunch is this push probably doesn't take out these old highs. The double divergence in MACD is still there. And this megaphone, if we actually tag this area, it is also, there's my crazy chaos level that I drew months and months and months ago. It's also a 113 extension. Also 127.2 extensions are up top here. And the harmonic guys, they're going to get all excited if they see these levels traded too. Also, too, if I looked at the profile, keep in mind the profile wants to look like a parabola ideally. And you can clearly see the parabola is empty up here. So if we do just the natural price exploration and fill out that parabola, it's suggesting that we probably want to do a bunch of volume up top here. So we were sitting last night going, this is looking really interesting. The only problem I had with all of this is, of course, this came in late on a Sunday. And then if we go and look at things like the CME boys, what the hell are they up to? Because honestly, I think these are the guys that are driving the bus here. And you notice there's that original gapping level up top. Notice this high right up here. Wicks and tails like to be eaten. Sunday evening, they gapped the market higher, trying to play catch up with the market. And that was a head fake. Remember the conversation about the S&P 500 and the way the gold acted and the silver acted. Something didn't smell right there. And, as I said, it's a trap, it's a trap. It turns out it was a trap. Also, to remember, this is a semi-quasi holiday. So I don't know whether all of the world participants are actually participating. Anyway, long and short of it here, market dumped on the open back into the price gap, and really the bottom of the price gap is still a little bit lower here. And really, I might argue that probably we're best to just simply wait for some sort of W. And if this thing can come and W here, then we can start thinking, okay, maybe we're going to get that push up top. So that isn't in place right now. And what really sucked about this is, to me, it actually looks like history is repeating itself. Because I've showed you guys this chart repeatedly, and I keep seeing this in my dreams over and over and over again. Now, like I said, if we did break out through the top, the problem, of course, is did RSI actually W? No, it didn't, son of a bitch. Did OBV actually W? That moving average number, actually the raw indicator number there is 302,245. And this high here is 302,699. So OBV did actually W here, but we never did get the W on RSI. Boo! Hiss, hiss, boo. So Davos never came in. And this is often the danger with working with RSI, is you might assume. Remember what assuming does to all of us. Makes an ass out of you and me. This is why assuming that the RSI is going to break out here when it's painting that, you can't do that. You have to wait for the candle to actually finish to actually visually show you that, yep, RSI did break out. So, there's a big hurry up and wait. And what's really interesting is, of course, everybody can see, today is a big fat doji. What does doji mean? Doji means indecision. We don't know what we want to do. And how interesting, notice the bounce off of the, remember, pre-halvening pump, pre-halvening dump, halvening counter trend rally, consolidation, fake out move higher, more consolidation, dump, pre-halvening pump, pre-halvening dump, halvening consolidation. Look at the little FU here. I don't know whether you can see this. I'll sort of zoom this out a bit. Sucker all the bulls into getting super bullish. All right, you can see. Hey, I'm a bull! No, you're not. So that little W got everybody all excited to the bull side, and then they crapped it out. And then more consolidation, and then, uh-oh. So I'm a little bit leery here. Whoops. Why did that not reset? It should have reset. There we go. Little bit leery here about believing if this thing is actually broken out here. I'm from Missouri. And, this is the worst part about this. I said this in the video that I did, that free video yesterday, the broiler chickens. Is a guy like me, honestly, my best bet right now is just to let things settle down. Yeah, maybe we might get a pop up top. And if you're a lower time frame trader, hunt those setups. Okay, fine. But a position trader here, what I'm really worried about is we pop up and megaphones are ugly, ugly patterns, and we just crap out hard. Ironically enough, I'd actually personally prefer that we just go sideways here and then have our nice, polite, very symmetrical correction, maybe back down into these lows, and that's it. Now, the worst case scenario on the bear side is something like, where the hell is it? It's around here somewhere. Man, I sure have talked a lot today, eh? We did like an hour and a half, an hour 45 minutes daily brief. So, enjoy. So my worst case scenario here, remember I went from the bullish side to, well, I'm still leaning neutral. Let's now talk about if we shit the bed and crap out here. Again, there's our funny little doji. Interesting how I actually put a tweet out to this effect today. What I'm kind of seeing is that billiard ball kind of fractally kind of top. And that sort of looks like this. So you notice you have like your left shoulder, that's sort of there. Then we dump, then we rally back up. That's, the middle part right here. That's this. If we start crapping out here, remember there's that doji right on that midpoint of that channel. We come back down and maybe even confirm this double top. Actually, I wouldn't be surprised if there was a nice little fuck you just to screw over these guys who are calling tops in here. And then the actual dump really starts in earnest. So, and then again, that's also, again, like that sort of fractally kind of image from the last halvening. So, the tweet that I put out here today was, hey, if this Davo can't get any traction, and it doesn't look like to me it's getting traction. If it can't get any traction, we actually really start to roll over here and start to break down, then this is really looking like this. And if that's the case, then, A, B, C, D, this is just a very normal, healthy, actually this air A, B, C, D would be boom, boom to like down into here. But if this scenario has to play out, where this whole entire formation has to finish itself. And remember, Jupiter, Saturn cross. You remember what happened the last one? Fucking humanity freaked out there. And if Bitcoin is running at about 20-25 bars ahead of that freak out event, which it seems to me it is, then if I extrapolate that something, usually consolidations wind up about 2/3 the apex. So if I start thinking about this schedule and the Jupiter-Saturn cross, and I start thinking about, what does the midpoint of this sort of billiard ball thinking sort of look like, then I actually have to start thinking that, believe it or not, this was the top. That was the cycle pivot right there. And this, the action that you're seeing here, is we're actually in the bear. The bear is active right now. This is the bear. And like I said, we'll know that this thesis is wrong if we can just go and break this original topping pattern that came in now like a week or so ago. It's really simple, bulls. Just go break this. But as it actually stands right now, I don't think that's what's happening. I think actually the top's in. This was the bull phase, and now we are in the bear phase. So we'll see what happens. Only time will tell. Worst case scenario, and this is basically what the message that I would have to anybody in the world. We know that the cost of production, and actually we heard today from Sjord that according to these S9 miners, 19 miners, they can actually take the cost of production down to like $2,000-$3,000 again. The report that we got from Sjord, he was talking to management at Hut and some significant shareholders. Not really insider information. I don't think they were directors. I think they were shareholders. But the consensus there was that they're not likely to see price go back down to that 2,000-3,000. But I definitely absolutely love the idea that if we can get at or below these reload zones down in here, this is a buying opportunity for like generational. Call me crazy. That's just how I feel. The problem here, of course, is that that's about half of where we are right now. And you know Bitcoin, it loves to go sideways and then fall in half and break all the public's heart, right? So I cannot justify investing in Bitcoin here. But if we do get this window down in this area in about a month or so, you know Brian, he's going to be super, super interested down here. All right, so finish off your little broadcast here for the public. I always love to look at the poop coins. Some really interesting little ones. I highly suggest that you try and find fundamental drivers if you are interested in any of these sort of altcoins. But here's a really interesting chart just to throw at you. You know, Brian, he loves his W's. That's a clothesline too, eh? Nice and solid. You can see that we've gone and broken, clothesline trend lines. If anything, this is an excellent analogy that let the trend line be broken and then hunt for your first W. And whoa, there we go. There's a nice big W. I don't know whether this is in a reload zone, but sure looks like an interesting level to me. I've already got a lot of this, so I don't really need any more. But this, yeah, look at that, sitting right in that reload zone. So this is a trader's life. Go do your own due diligence. Mona Coin's a fun coin over there in Japan. Some people have talked about it as a shill and a scam coin. I don't think it's scam. I think they've got enough traction because the Hello Kitty icon is extremely popular in Japan. That's sort of their moniker. No guarantees in the management. I mean, I just like to point out W's. You can all see these levels. If a name like this does appeal to you, hats off. If it doesn't, I won't be offended one way or the other. This is an interesting looking price action. Suppose if we just draw it off of the candles. Oh, okay, that's interesting too. So break that downtrend line is awfully inchy. And then try and hunt some W's on the other side of that. So, there it is. So, that's the kind of market that I think we're in. And previous W's, weekly W's, reload zones, trend lines broken. You do the math. Does it fit into your plan? Are you a speculator in the pub coins? Well, it is what it is. All right, everybody, why don't we leave the video at that for today? I hope you got some good value. Special hats off thanks to Jamie for awesome FA report today. Definitely worth the site membership just for those reports twice a month. And excellent report from Sjord, really building out one hell of a IT team. And TRI, man, wow, what a platform this thing is turning into. I think probably the only thing I'll mention is, if I'm not mistaken, there's 1 or 2 days left on this promotion. So if you are still interested, you're going to be a little bit late to the school program anyway. But we can still sneak in if you really want to. It's up to you. You remember, I'm not a shill. We got plenty of students to deal with. If anything, hats off to Julian and David for putting together this marketing program in such quick notice. And if anything, what I really like about this page is you want to get to know TRI and what we do and the kind of difference we make in people's lives. I really love these videos that they've embedded on this page to really get to know the people at TRI. And then also these reviews are just, wow, just over the top. They're just so beautiful. Okay, everybody, let's leave the video at that. Have yourselves a great rest of your day. All the best, and bye for now. Oh, by the way, don't reply to Logan on YouTube. It's a bot. All right, bye, everybody. Toodaloo.